investors are picking up millions and millions of shares of blue chips on the Nigerian market, from Dangote Cement to Zenith Bank to Nigerian Breweries to Guinness to Stanbic to GT Bank. All that happening as we start the new month of October. Let's bring in Rotimi Fakayejo, who is CEO and trader at Enterprise Stockbrokers, on the phone. Good morning, Rotimi. Good to see you.
Good morning, Bolton.
It's good to have you. And we've seen this very heavy crossings in the shares of Lafarge, of Dangote, GT, Zenith. Who is buying the stocks in millions?
Well, definitely, without doubt, there are investors that have full confidence in the market and also in these quoted blue chip companies.
So we've done close to 32% so far this year, and you think investors, home and abroad, are still interested in the Nigerian market?
Well, the interest is still very much there because the potentials are still very much vast. And it is when you look at it, because all the time, investors look at the risk and also the return. And the risk profile of Nigeria, to a great extent, has reduced, has improved, so to say. And I believe that the return also is getting better. So investors have every reason to seek a lower risk and also a higher returns. And that is exactly what is dragging investors closer to the Nigerian market.
A very quick one. Yesterday, PZ, Cousins, this consumer goods company, even though it's doing a little bit of refrigerators and things like that, air conditions into part of the business, reported this negative 181 million naira decline in post-tax losses for its first quarter ended August. The market wasn't really happy with that.
Yes, because at the same time, too, if you go back to what happened in the same period in year 2016, it's the same loss-making trend. But as they move further in their financial year, they seem to at least recoup what had been and also be able to turn out profit. So, and also comparatively, for the same period last year, the loss position was 2.43 billion naira. As compared to 181 million naira for this year loss. So I think it's still an improvement, and I believe that the overall figure for the end of the financial year is definitely going to be better than what it was in 2016.
Well, we're stepping into, we haven't gotten your views about the new quarter. What's your view? Does it look like we're starting off on a note? Third quarter didn't really look particularly stellar as we had the second quarter at the marketplace. What's your view on the fourth quarter?
Well, I believe we haven't seen the market actually at least did well in the second quarter, and also to a great extent okay in the third quarter. But for me, in the fourth quarter, two things are definitely going to define what we're going to see. The results for the Q3 are definitely going to be what we channel the way for the activities in the market, and at the same time, the policies that we get, the readiness of the budget as proposed that by October is going to be available for the legislation to look into. All those things, I believe, is definitely going to get the end of the fourth quarter. But at the same time, I see it being better. I mean, at least being an increase to what we have seen in the last three quarters. So we expect that at the end of the trading year for the market, we're going to see the All-Share Index rising higher than 32,000 basis points.